Morning traders, this is Charts247. I train traders how to trade in harmony with the market. So today we are going to be buying this morning. I'm going to be buying the pound US dollar. Just trying to set the trade up, and I'm going to explain why we're doing this because in my analysis yesterday we looked at the pound as a potential pair buy and in for reversal. And this trade is something that I don't really want to go back into the fine details of the analysis because that has been done yesterday. But for us, analysis means nothing. It's good to do it because we are preparing to trade the following week or the following day whenever you do your analysis. But the most important thing is execution in trading. You can analyze and go against your analysis, or you can analyze and think this market is going to go down and the market is going up. So what are you going to do? And that is where discipline comes in. That is the difference between successful trading and unsuccessful trading. And my definition of successful trading is knowing what to do and doing what you know. It comes with experience, it comes with exposure to the market, understanding your methodology, where am I going to be right, where am I going to be wrong if I take this buy, where am I going to be wrong if I take this sell, and being able to actually put your money where your mouth is. And that is successful trading, doing the right thing, or what you feel or think is the right thing, and doing it consistently. Okay, so enough of my preaching there. What we have right now in the pound US dollar is the 15 minutes chart. I'm going to drop down a time frame. We analyzed this on the 1 hour yesterday, and as you can see, the momentum low is banged there, very clear. What my play is this. Okay, let me clean this chart up a little bit, remove 14 drawings. Where did this come from? So let's draw the momentum low again. That momentum low there is key because we can see we have structure, then we have a structure down, we have a structure up. This becomes a momentum high, then we broke this momentum high once, twice. This is key. Okay, this here is a bullish market. The way the price formed with the failure in the center of it, this is important because had it been we just add the momentum high, boom, 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 and there's no failure in between. This failure makes the difference. Okay, and when I'm saying failure, there are people that push this price below here. Okay, and this is a downtrend, and when a break below a low occurs like that, okay, expectation is for price to continue lower, but they made this low here without breaking this low. This is key here. Okay, this is a failure point. Okay, so let's label it. I'm going to use the function in the trading view. Failure, that is the failure to make a lower low. I'm sure you guys will be able to, you might need to watch this video again to understand this concept. You need to see this. A failure to make a lower low, then the price rallied to break above the pullback or rally high, which was the momentum high, this internal one here, and they made it high. Then eventually they dropped the price, creating a one-sided market. I've explained this yesterday. I'm repeating myself. This is a one-sided market because there's no structures here. All these are just lower high, lower high, lower high, lower high, lower high, lower high. None of this is structural. Okay, Let me just pause right here. Okay, I'm back. So what we need to do when we encounter a one-sided market like this is to drop down to, so if you're using an if your main analysis is on the 1 hour chart like this, and we can see one-sided move like this, I like to engage this. This is more technical actually. This is a very technical trade, which is what we want to see. Okay, we can see there's a lower high here, there's a lower high here, there's a lower low here, there's a lower low here. We've already seen the first break of the lower high. Okay, so people might be saying, where's the lower high? Let me just enable those features. Okay, so as we can see, I've enabled the features. We have a higher lower low here, which it represents a structure. So for me, we drop to the 15 minutes chart, makes it easy. We're now looking for a rally high. Boom, we have a rally high. Then once we have a rally high, you're looking for a structure. You guys know what the structure is now. Then we start to engage. Now it makes sense why we're taking this. Then I want to start to engage this market from the structure. Okay, everything has lined up. I'm not doing the analysis on the 15 minutes chart. The main chart where the analysis has been conducted is on the 1 hour chart. What I'm doing is I'm using the 15 minutes as an execution time frame, because everything is pointing to me that I should have a rally, or I should have a short covering rally once the price come back above this momentum low. Another confirmation will be when the price break above, or if the price break above the rally high on the 15 minutes chart, which is this one here. Okay, we color this there. Okay, you can see the previous rally highs have been sold. Okay, they did not give you an opportunity in making a lower low straight away below the previous lower low. Rally high making a lower low below the previous low, rally high making a lower low below the previous low. But what is different with this one? You can see it. I don't need anyone that's been trading even for a few months will be able to see the difference between this lower low and this lower low. And that is the structure. For those of you guys that have the SmartTrader, this is what you need to be looking for. Okay, we are now engaging, and this structure should be the stop loss. That will be your initial stop loss. So the low 132,306, so that would be my stop loss. 132, that's the stop loss there. 132.28, 280, that's it, that's 282. Okay, and that's a trade that I can take without thinking, oh, what's going on. And then you have these targets here. We can go back onto the 1 hour chart and start to identify those key points. All these X's are your target. They are your, we're not saying the price may come. The ideal expectation for this trade is for price to eventually break the 134.82. But from what I said yesterday, even if that happens, this low is still likely to be broken because of how many lows we found below the pullback low. 1, 2, 3, 4, 5. That is telling us there's still a directional move at the low. The price is too low. The buyers wants to discount, and they may discount back above this rally high before they start to look for another selling opportunity. And that is, my friends, that's how the market works. Okay, for me, I think that's enough for this morning in terms of analysis and talking about this. This is the trade we're going to be focusing on today, and you guys know the drill. You have to think about everything in probability terms. Anything can happen, so you have to accept the risk. An edge is just an indication of a higher probability of one thing happening over another. That means because you've taken the trade, it does not mean it has to work. Okay, you your success comes from doing the same thing over and over again, and over a sample size of trade. You have losing trade, you have winning trade. The idea is your winners should be bigger than your losers. Okay, and they will even themselves out. The 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 sequence of wins and losses cannot be predicted. That is why when we have trades, we have to take them. We cannot pick and choose. Okay, I like to take one pair at a time. In the extreme situation, I do take two pairs at the same time. But my idea is, from my experience, I can analyze two, three pairs and feel, based on probability or based on what I feel has worked in the past. And trust me, it doesn't work like that all the time. I might sometimes I've said to myself, I've got three pairs, I've shortlisted them down to one pair, and I'm saying to myself, this is the best one that I can trade. And guess what? It's actually not the best one. It may make you money, but the ones that I've sidelined actually makes more money. That's why I know a lot of people do that's diversify their portfolio, because I don't use automated system to trade. I trade manually. I like to focus on one pair at a time, and that's my own style. That's what works for me. It may not work for you the same way. That is why I don't say to people only trade one pair, because we are all different. Okay, some people, I have a friend, he can trade 8 pairs at a time, have those small screen on his chart, and he's doing it. But that does not work for me. Okay, this is a quick one this Monday morning, the 16th of March 2026. If you like what you see, give us a thumbs up. My name is Shegun Charts247. On to the next one. God bless and enjoy the rest of your week.